Good morning. It's Tuesday, the 21st of May, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital, and just finished a round of voting. That's on Monday. Our top stories and themes for the day: conflicting signals from the stock markets. What should you believe? An inclusion in the bond index is not enough for foreign flows into debt, according to Moody's. Some 14 major world markets are at all-time highs, and it's not just India. Why that matters. How Indian banks are having perhaps their best time in history. Elon Musk is in Asia but skips India again, lands in Bali to launch Starlink, the internet service. And the real numbers on how India could see more artificial intelligence jobs or AI jobs being created rather than lost, an exclusive.
This is a core report with Govindraj Ethiraj.
The age of conflicting signals. So the markets have been steady, including thanks to a special trading session on Saturday, that's the 18th of May, to test disaster recovery systems. The BSE Sensex was up 90 points to 74,005, while the NSE Nifty 50 was up 36 points to 22,502. One stock made some news. Nestle India was up about 2%. Or rather over 2% after shareholders rejected a proposal to increase royalty payments to its Swiss parent Nestle. The big news is gold again, which has surged to fresh records, betting once again on the premise that the Federal Reserve will start easing monetary policy this year, and of course all that buying that's coming in from the central banks like China and even India. Geopolitical tensions in the Middle East continue to hold sway. Market men, however, did not see any impact of the sudden demise of Iranian President Ibrahim Raisi in a helicopter crash, and there was no impact seen on commodity prices, including oil. To return to gold, bullion jumped as much as 1.4% to hit about $2,450 an ounce in Asia on Monday, surpassing a previous intraday high reached in April, according to Bloomberg. Gold in general is seen as a good bet for capital appreciation once interest rates drop. As we've been pointing out, silver too has been hitting all-time highs, though silver has dual objectives. One is, of course, ornamental, and the second is industrial. A subdued dollar makes dollar-priced gold more attractive to buyers using other currencies, CNBC reported. A fresh reminder, world markets are on a high right now, and it's not just India which is holding steady at close to peaks, and of course is now seeing some unprecedented level of talking up by senior politicians in the government, including the Prime Minister. More on that, which is world markets, in a moment. Looking back, the Dow Jones Industrial Average closed above the key 40,000 level for the first time on Friday last week after hitting 40,000 on Thursday, though it did not close above that. World markets on a high. From New York to London to Tokyo and of course Mumbai, world equity markets are close to or crossing record highs. Of the world's 20 largest stock markets, 14 have hit all-time highs recently, according to Bloomberg. The MSCI ACWI index, which tracks developed and emerging markets, has been on a record-breaking run, setting another new high on Friday. In the United States, the S&P 500 and NASDAQ 100 indices hit records this week, that's the last week, while the Dow Jones crossed 40,000 for the first time ever, as we pointed out a little while ago. Among other stock markets at or near their record highs are in Europe, Canada, Brazil, Japan, and Australia. Now, this obviously suggests that the forces of supply and demand are strong. There is a lot of capital in equity secondary markets moving from other asset classes or from savers, like in countries like India. It is also a useful reminder that when markets move in tandem like this, any reverse trigger can also affect everyone at the same time. Analysts in India rightly point to the very strong domestic fund flows we've seen, including via mutual funds and systematic investment plans. But to assume that there will be no sudden exit or turnaround is, I think, being a little naive. Meanwhile, foreign investors have pulled out some 28,000 crores from Indian equities so far this month, thanks to both the general jitteriness which goes with election periods, obviously made worse by the long multi-phase casting of ballots, and then the attractive valuations of Chinese markets. It would appear that FIIs have pulled out most of the funds they brought into India in February and March, and that's out between April and right now. I must mention here that the markets have and had priced in a BJP victory, though there could be a relief rally thanks to the jitteriness in the interim period going away. And then, of course, the valuations are high everywhere. Any astute institutional investor investing on behalf of other investors is paid to take money off the table, as they say at times like this, and perhaps they are. China and Hong Kong have, of course, bounced back this year. The Hong Kong Hang Seng Index is up about 19% in the last month and is considered better priced right now. Will an inclusion in bond index help ratings? India's inclusion in the JP Morgan Global Bond Index will not be enough for Moody's ratings to upgrade the country from the lowest investment grade, as it needs structural reforms to improve its fiscal metrics, according to a credit officer at the ratings firm reported by Bloomberg. Now, the point here is not so much about the global bond flows into debt in India, which would happen in any case, but more about how the ratings agency views ratings. A senior vice president at Moody Ratings said on Monday that he doesn't necessarily think that the bond market inclusion was going to be a material addition to the strengths that they had already ascribed to the government's ability to fund itself. He pointed instead to the fundamentals. A strong growth and implementation of structural reforms that would result in the pickup of private sector investment would be key to improving fiscal metrics. As you know and as we know, a lot of the investment in recent years has been driven by the government in major infrastructure projects. JP Morgan Chase will include India in its emerging markets bond index next month, with the company estimating that may draw as much as $25 billion of inflows into the country's debt market, some of which has already started trickling in. Bloomberg Index Services will also start including India in its emerging market index, but that's from January. FTSE Russell has also put India on its watch list for inclusion in its emerging market bond index. The Moody's officer said that their assessment of India's government liquidity risk was actually already very strong, as India's large banking and insurance sectors are a reliable source of financing and actually a key credit strength. And we'll come to why and how on Indian banks in a moment. Access to bond indices will not lower India's borrowing costs significantly, the Moody's rating officer said, as the inflows are relatively small compared to the general government debt of around $3 trillion. He also said that domestic macroeconomic factors, including policy rates and India's track record on inflation management, will impact yields. Moody's current rating is at its lowest investment grade, that's Baa3, with a stable outlook. Indian banks are having their best time in a long time. It might sound almost strange going by recent history, but banks and thus financial services as a whole have not had it so good in a long time in India. The last year has seen Indian banks cumulatively post a net profit of more than 300,000 crore rupees or 3 lakh crore rupees for the first time ever. Within that, privately owned and run banks have reported a higher net profit growth in fiscal year 24, that's 23-24, compared with the bottom line growth reported by public sector banks, according to a money control analysis. Now, but the fact that they are being compared and almost ranked equally is in itself a very positive step. On a year-on-year basis, 26 private banks' profit jumped about 41% and 12 public sector banks' net profit rose 35%, according to data that Money Control has put out. By the way, there were more public sector banks earlier, even a few years ago, but many of them, if you've been following the sector, have merged. Among private sector banks, and this is something that is quite interesting, HDFC Bank alone reported the highest net profit of 60,800 crore rupees last year, 60,800 crores. And in public sector banks, the country's largest bank, the State Bank of India, reported a net profit that was a little higher of 61,000 crores. All of these are substantial numbers by any stretch and, of course, reflect the intrinsic strength right now in the Indian banking system to take some risks. Money Control quoted industry experts saying the jump in profit is largely due to the banks maintaining high credit growth, resulting in an increase in net interest income. Artificial intelligence could be a bigger job opportunity for India. Will artificial intelligence kill jobs? Yes, it could, but the sheer quantum of jobs it could create could totally offset what could be lost, and in India. The new numbers, specifics of which have been worked out by technology entrepreneur and author Dr Alok Aggarwal, are quite staggering. More on that and him in a moment. Aggarwal argues that few pundits have discussed new jobs that are likely to be created because of AI, and he focuses on one such emerging job category of data annotators, which has largely emerged due to AI and that has seen a meteoric rise during the last decade. He says that there are more than 1,000 use cases of AI that have already been operationalized, and almost all of them require supervised machine learning, and hence they require gigantic amounts of data to be annotated or labeled. Hence, during the last decade, annotation as a service is on a meteoric rise. There are about 400,000 annotators worldwide, and by 2050, this field could have about 15 million of them. Currently, the market size is about 11.5 billion US dollars, but is expected to be almost $1 trillion by 2050. India has a big opportunity here, says Aggarwal. More than 55% of the labor involved in creating an AI system requires cleansing and annotation of data, which needs to be done inexpensively but accurately. Furthermore, these annotators need to work very closely with AI experts, data scientists, and data engineers. India today has about 5.4 million software professionals, and many of them are AI experts, data scientists, and data engineers. So the proximity of annotators in India obviously helps. Now, there are several fairly logical reasons why AI annotation will do well in India, including, of course, English language proficiency, internet connectivity, and affordable wages. But for about 75% of all use cases related to AI, the annotators only need to have a high school education, and most such annotators can be trained to become good ones within 3 months, says Aggarwal. Of the 400,000 annotators worldwide, about 200,000 are already based in India. By 2030, around 1 million annotators are likely to be working globally with an annual revenue of $36 billion, of which about 550,000 could be in India with a revenue of about $16 billion. I spoke with Dr. Aggarwal, who's based in the Bay Area right now near San Francisco, on the prospects for AI jobs. Dr. Aggarwal received his PhD in electrical engineering and computer science from Johns Hopkins University and worked at IBM Watson Research Center for about 6 years from 1984. He also founded IBM India Research Center and co-founded eValueServe in 2000 and was its chairman until 2013, and now runs Scry AI, or SCRY AI, an AI research and development company. I began by asking him to explain, firstly, how he was seeing the growth of AI jobs, how it all began, and where it could go.
AI was started in 1950 as a theoretical question from Alan Turing, and then it went through its hype cycle, the first hype cycle between 1955 and 1973. And then the researchers realized that it's much more of a harder problem than they had originally thought. And that's when the first winter started. Since then, Moore's law took over. The cost of transistors or cost of computing and communication, electronic communication, has come down substantially. And that has led to now the new boom in AI, where we can actually do AI models at a much larger scale than we were ever able to do before. So two things are happening in driverless cars. By the way, driverless cars is still at least 15, 20 years away. In fact, Cruise, which was one of the companies which was doing an experiment in San Francisco, has kind of backed out, and Waymo is barely succeeding. And the reason is they have a lot of human intuition comes into driving, and that's where the driverless cars are not very good. So people who are following driverless cars, suppose you're behind a driverless car, it will go so slowly that you'll get frustrated. So there is a lot of issues which are still unresolved. But of course, the hype has been there since 2018. Some of it has gone down, like most hypes do. And 6 driverless truck companies have gone bankrupt. 8 have gone, more or less, been bought by others. But nevertheless, your question was, how does AI help? So AI, first of all, helps in computer vision. So there would be cameras in driverless cars which are checking what is in front, what is in behind, and so on and so forth, so that no accident takes place. Now, as part of it, once the computer vision happens, once the cameras are taking pictures, you need to identify that there is a garbage in front of you, so you better slow down, or if there is a pothole, or there is a human or somebody walking, therefore you better stop. So all of these things are computer vision algorithms. So the algorithm has to be trained that, for example, there is a pedestrian crossing in front of you, and therefore the AI model, which is trained already in driverless car, should immediately stop. Now, it's very easily said than done, because these systems require a lot of data to be trained. And suppose you're talking about, to take an example in US, if you're talking about pedestrians crossing in California, let's say in San Jose or San Francisco, there is no snow there. So the whole system is trained on pedestrians without any snow being present. And if you now apply to Boston, there is a lot of snow that happens in the winter. And therefore, the driverless car, the AI model will fail miserably, because now you have a bias of no snow and you have introduced snow. Happens all the time, not only with snow, but with fog, rain. You may not have trained the system for a rainy day, or maybe not enough of a rainy day or fog. And all of these things become a problem. So a lot of such AI models are present in these cars, not only about pedestrians, but you want to figure out how far are the trees from you, whether you will hit one of the branch which is hanging low from the tree. You need to figure that out. You need to, of course, figure out stop signs, that there is a stop sign. Is it a four-way stop sign? Is it a yield sign? And so on and so forth. So all of those are recognition problems that AI models are trained on. And of course, when there is a car in front of you or another vehicle, and how far in front of you is it? What is the speed at which it is driving, so that you can maintain a proper drive distance between the two vehicles? All of that is in the AI.
So the training for that AI model, I mean, where the computer actually recognizes that, this is a person and this is a garbage can, is something that's happening in coding farms or labeling farms, I think, as they're called now, or annotation farms in India and Africa and other countries, isn't it?
Yes. So part of it is the annotation is definitely because of cost reasons. A lot of it is happening in India, Philippines, Africa, and other places. But the actual coding depends on where Waymo's, for example, which is a driverless car company, where its data scientists and computer scientists are sitting. Now, some of them it's part of Google. Some of them would be sitting in India. Some of them would be sitting in US. It's better if the data scientists or the people who are coding are next to the data annotators, because then they can talk to data annotator team and figure out what was their view, why did they annotate in that particular way to make life simple. Data annotation is not as simple as people think, because there are shades of gray, there are shades of blue, there are shades of people versus non-people, and so on. I mean, is a gorilla passing through your intersection? Not that that will happen very regularly.
So the market for annotation and labeling, I'm assuming, is now very large and forms a critical part of the back end for the whole growth of the AI industry.
Absolutely. So it is ultimately one of the most critical parts of in AI. And if you look at data cleansing, data annotation, and later on ground truth checking, which is part of data annotation, I'll come to in a minute, that often is about 50 to 55% of the cost of the entire project. So people think, oh, data scientists and AI professionals like me are spending that much time. We only cost around 15% of the whole, as opposed to data annotation and ground truth checking. And ground truth checking is, hey, how accurate is my AI model? So we were talking about driverless cars. Before you put Waymo's driverless car in San Francisco, you want to see, you give it about 20,000 pictures or 2,000 pictures, and you want to see how many times did it not recognize a human. If it did not recognize a human in the roadway, that means it could hit that pedestrian. And that is where, suppose we do not know how well it does until we do a ground truth checking, that out of the 2,000 pictures where humans were there has to be a human who has to verify how many of them had humans. And that's often called ground truth checking, which is another aspect of data annotation. And that is a very important aspect of annotation, particularly in what is very strongly the reach today in large language models and GPTs, because these have machine hallucinations. And therefore, they could be completely wrong and completely out of this world. That's why they call machine hallucinations. So humans have to check. And that's a very important.
What kind of opportunity are you seeing for countries like India in this chain or in this pipeline of work for AI at this point?
In my book, I discussed it actually a global market by 2050 to be about 15 million people working on this area. 15 million, which is not a small number. India would probably have about half, maybe slightly more, maybe 9 million out of 15 million by that time. The market will be huge for India. According to, I'll be fair to say that data annotation is a very new category, and hence it's not very, very specifically defined, broadly defined. So it contains all kinds of people who are doing data annotation and ground truth checking. For example, if a medical transcriptionist who was transcribing medical records until yesterday could be now a data annotator, because it's now the AI system which is transcribing, but someone has to check how correct it is, and if it's not correct, fix it. So currently, according to us, there are about 400,000 data annotators in the world, and about 200,000 are in India, about 100,000 are in China, and remaining 100,000 in the rest of the world, including Philippines, which has a large contingent, and Africa. And because of the low-wage countries, I think that will continue to be the case.
Okay.
Out of 15 million, we are expecting about 9 million to come from India, because India has very good expertise or proficiency in English language that helps India over China.
So it's almost like a next wave of BPO, isn't it?
It is there is some consolation India should have, because part of the jobs will be lost. I mean, if we look at 2 decades from now in call center domain, because a lot of the work that call center agents are doing will be done, at least the recommendations will be provided by LLMs and by AI systems. Now, I may still be a call center agent reviewing those recommendations and then giving it to you, the customer, but it would take away the likelihood of my doing all the work. And therefore, the number of agents will reduce. Similarly, number of medical transcriptionists will reduce, because AI will be doing the medical transcription. But on the other hand, the ground truth checking would increase. So in some sense, there would be a trade-off. I think overall, India will gain more, because we have only 1.5 million call center operators or agents right now, and a number of medical transcriptionists is around 150,000. So overall, India will gain quite a bit. And I think this is a good thing for India. Another good thing is that these people can be easily located in second-tier, third-tier cities. So it's good for the cities also. They would get a lot of revenue coming from this kind of a BPO. Some of it was what I will call KPO, knowledge process outsourcing. Some of the people who are doing data annotation will be pathologists trying to figure out whether a particular picture shows skin cancer. So it's not only the low-end BPO work.
The way it's going, is there a sort of peak training point for AI systems, at which point, let's say, you will start needing less of people to do the annotation or the labeling or the checking?
There may exist one in the future, in a couple of decades, and at least a decade. But right now, every company has its own data. So even if you look at 2 banks, let's say HDFC and ICICI, they will have their own data. So they will need their own annotators. Now, whether they outsource the work or they hire these annotators in-house, but they will need their own annotators for their data, because if I am asked a question from ICICI, its answer, because it has different data, its answer would be different than HDFC. For example, if my question is, what are the total assets owned by or managed by ICICI? Obviously, they're different than the assets managed by HDFC. So at least at this point, given how fast AI systems are being operationalized, there is going to be an exponential rise of the number of annotators around the world. And you have cost implications, as I said, 55%, 60% of the cost is because of data annotation, ground truth checking, and data cleansing. I think this work will go to lower wage countries like India, Philippines.
Right, Mr. Aggarwal, thank you so much for joining me. Elon Musk skips India again, now lands in Bali. Elon Musk has launched SpaceX's Starlink satellite internet services in Indonesia as the Southeast Asian nation seeks to boost internet connectivity in remote areas, according to CNBC. Now, this also means that Musk is back in the region, including wearing a colorful beach shirt, and not in India, where he's also pitched the Starlink service, which in turn is awaiting regulatory nods. In April, Musk was all set to visit India and to meet with Prime Minister Narendra Modi and cut a big check for investing in an automobile plant, but then cancelled, saying he had very heavy Tesla obligations. He landed in China a week later. In Indonesia on Sunday, Musk inaugurated the service at a community health center in Bali and told local media he was very excited to bring internet services to areas with limited or no connectivity, and that internet connectivity could be a lifesaver to remote medical clinics. Starlink is already available in Southeast Asia, in Malaysia, and the Philippines. Indonesia is the world's largest archipelago with more than 17,000 islands and faces an urban-rural connectivity divide where millions of people living in rural areas have limited or no access to internet services, reported CNBC. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.